Can a 7% fixed deposit generate a 16% return? For certain NRIs, the answer could be yes. But wait, the bank is not offering 16% FD. The additional return is coming from leverage. RBI has introduced a special window for FCNR deposits and has now clarified that banks, including their overseas branches, can lend against these deposits or issue SBLC, that is, a standby letter of credit, to an overseas lender. And according to reports, some large banks may offer leverage of up to 9 times the original deposit. Let me explain this with an example. Suppose an NRI places a $1 million FCNR deposit earning 7% interest. The annual interest comes to $70,000. Now, using that deposit as a security, assume the NRI receives a $9 million loan from an overseas bank at 6%. That borrowed $9 million is placed back into FCNR deposit earning 7%. So now the total amount earning 7% is $10 million. The total interest income, $700,000. Interest cost on $9 million is $540,000. Net income, $160,000. But NRI's original capital was only $1 million. So therefore, the effective return on the original capital becomes 16%. An eligible FCNR deposit interest is actually tax-free in India. Sounds brilliant, right? Now comes the important part. 9 times leverage is not guaranteed by RBI. The actual leverage may be 3 times or 5 times or maybe 9 times depending on the bank, the deposit amount and the customer's credit profile and the bank's ability to use these funds. The final return will also reduce by SBLC charges, processing fees, borrowing cost, and any tax payable by the NRI in the country of residence. And because this is a leverage, even a small increase in the interest rate of the loan can substantially reduce the return. So this is not a guaranteed 16% fixed deposit. It is a leverage banking structure built around the FCNR deposit. The special RBI window is available only up to 30th September 2026 and the eligible deposits generally need a tenure of 3 to 5 years. Therefore, before investing, ask the bank for 4 things in writing: the FCNR deposit rate, the loan interest rate, the maximum leverage offered, and the complete SBLC and the processing charges. Because the deposit rate may be only 7%, but if the structure is executed correctly, your effective return could potentially be much higher. Save this video and share it with your NRI friends who keep the money in overseas bank deposits.